Welcome back, everybody, to another episode of Here Semiconductor Investing and More, the number one semiconductor podcast in the world, or so I like to say. Like always, I'm joined by an amazing co host. Good morning, Nick. How's it going?
I'm good, Jose. How are you this morning?
Pretty good, pretty excited. Like every week, we get almost a whole hour of discussing the semiconductor market. And today's topics, I think, are pretty interesting. We're going to take a closer look at ARM and their IPO process. Some recent news has appeared on that. We're also going to talk about generative AI, Nvidia versus Intel, 2022 semiconductor sales, in a special way to maybe invest in companies like SpaceX, which you can't invest individually. So a lot of interesting topics, and let's just get right into it. I think for topic number one, Nick, you're going to lead us a little bit into this ARM and the IPO process that might be happening within maybe the next few quarters.
Correct. So, ARM Holding, that is the company that is owned by Japanese telecom and tech investor SoftBank. It's a subsidiary, and you probably remember that's the company Nvidia was trying to acquire from SoftBank. That deal was ultimately scrapped early in 2022. But when that deal kind of got nixed, there was always this talk that, well, if not Nvidia, then maybe ARM will just go public then as its own standalone business, because it's become clear that SoftBank has won it out. So maybe just kind of an introductory thing here, Jose, for this topic. The reason why it came up is SoftBank did report earnings on February 7th for the 9-month period ended December 2022. And ARM revenue was up 3.7% year over year in US dollar terms, revenue of $2.12 billion. That compares to a 35% increase in fiscal year 2021. So I think no surprise here, big slowdown for ARM. One of the big reasons, though, revenue was down was currency exchange rates. So in Japanese yen, comparing year over year, growth rate was actually up 27%. Net income was up 77%.
Oh,
So
wow.
I think a lot of optimism here. Yeah. Whoa was right. A lot of optimism here after those results about a possible IPO in 2023. So I have a couple of questions here for you, Jose, before we talk more about maybe some of the things going on with ARM at the moment. Just looking at those numbers for the 9 months ended in December, would you invest in ARM Holdings?
Before we go any further, make sure to hit the thumbs up as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below. Looking at valuation is going to be important, but for me, ARM would definitely be a company that I would want to invest just because we are seeing this huge adoption by big companies like Nvidia, for example, who are shifting into ARM-based products with their great CPU. We also see Apple, or other products or other processors that they are developing are no longer in the x86. They are based on the ARM architecture. So I believe this is going to continue. And for that reason, I do believe there's going to be a nice amount of tailwinds for ARMs and as technology continues to evolve as well. How about for you, Nick?
Yeah, I agree with you, Jose. I think this is a growth business, even though obviously the currency exchange rate kind of hides some of that. I think it's important, maybe just a little more context here. So ARM makes its money in two primary ways. So it reports technology royalty revenue. So that's basically every time an ARM-based chip gets sold, ARM earns a little bit of revenue from that chip sale. And then non-royalty revenue is basically technology licensing deals that they sign with companies that want to start designing custom chips using an out-of-the-box, ready-to-go ARM design. So like kind of like a blueprint that they can then kind of customize to their own particular need. And I think the non-royalty revenue is what kind of dragged down growth in this period, because they signed a lot of new deals in the years prior, and now they're kind of lapping that. But the royalty revenue was actually up a healthy amount. I have a follow-up slide here on that just kind of explains some of the areas where they're going, like you just pointed out, Jose. Desktop computers, as we know, the Apple M series chips are based on ARM, and there's a lot of, obviously that's a big market because x86 Windows PC chips are off limits. That's x86 architecture. Intel and AMD are the duopoly on that. So the Apple M series chips is like a new growth market. But then also infrastructure, IoT devices, data centers starting to pick up steam for ARM chips. This is really definitely an interesting business for sure.
Nick, I'm looking at the second slide that you prepared here, and you kind of mentioned a little bit how Nvidia was going to acquire this for about $40 billion in 2021. When I do believe I can't remember the article I read, but it was a suggestion that ARM leadership did mention that they are looking for going at least market maybe by within the next 12 months or so. So it seems like they are a little hesitant to, or a little kind of hesitant to do that. Do you think the valuation would be closer to that $40 billion, or do you think it would be higher or lower? I know in 2021, right, we saw this huge valuation, a huge boost in valuations in companies, especially in the semiconductor market. I feel like now the semiconductor industry, a lot of investors are a little bit worried, and we've seen a lot of that valuation pulled down. So out of your crystal ball that you have there, Nick, do you think it would be higher or lower than that $40 billion valuation?
Yeah, this is tricky. So yeah, that second slide you're referencing, Jose, I do think it will be lower than the 40 billion Nvidia was willing to pay. And Nvidia was going to do a combination of cash and stock, right? So they were going to use their own stock at record high valuations as well to help pay for ARM. I think what will be interesting to see though is if ARM does kind of track towards less than 3 billion in annual revenue for fiscal year 2022, I'm not sure SoftBank is going to get back the 32 billion that they paid for it back in 2016.
Ouch.
SoftBank has been plagued with problems in their investment decisions in recent years as valuations have gotten clobbered and come back down to earth. So it'll be definitely interesting to see. There are some other interesting issues going on here as well. So when Nvidia was still trying to acquire it, the chip industry was kind of split. Some companies saying, yeah, this is fantastic. Others saying, no way, we want ARM to remain independent. One of them was actually Qualcomm. And CEO Cristiano Amon was saying that, hey, we would invest in an ARM IPO. I'm not sure if that could happen now because ARM filed a lawsuit against Qualcomm late last year against that Nuvia acquisition that Qualcomm made. To try to develop chips that can compete with the Apple M series chips. It's kind of a weird deal because like if ARM wins the lawsuit and Nvidia has to scrap that project, then suddenly ARM loses out on another new revenue stream from laptops and PCs, potentially desktop PCs as well, if Qualcomm can make some competing ARM-based chips that displace x86, Intel and AMD. So it's a lot of interesting things going on here, Jose. I think I would need to see more information closer to the IPO before I made a final decision, but I would lean towards maybe possibly no at this point. I would not invest in it until sufficient time passed because I think there's going to be some valuation concerns.
Definitely, Nick. I mean, when you were just talking about that SoftBank acquisition of 32 billion and them not being able to get it, it kind of reminds me of the Intel situation with Mobileye. I believe like I forget how much they purchased it from, but I remember when it just recently valued, it was kind of almost at the same price point of their purchase. And initially in 2020 and 2021, when they really wanted to kind of take it public, that valuation was almost 2x at least. what it actually went. So it's going to be pretty interesting to see what that valuation might come down to during the IPO process.
Right. Another thing to keep in mind too, I think we wouldn't necessarily need to invest directly in ARM to get some exposure. I have a hunch that as this IPO process progresses, some chip companies might put out some money and invest in ARM, kind of like Qualcomm said that they might be interested in doing. So it might be kind of a roundabout way to invest in ARM without having to purchase ARM directly.
All right, Nick. So I think that's good for topic number one. Let's take a closer look at topic number two. And for this one, I want to jump into the generative AI, something that has kind of taken the internet by storm in the past few months. And we are seeing a lot of kind of competition heat up recently. So first, if we jump into my first slide, I kind of mentioned this. Could this be great news for semiconductors? I believe short term answer, yes. But let's explain why. So, first, let me just give some examples of generative AI. The one that's mainly known is OpenAI ChatGPT. That's the most popular at the moment, where you can just go and pretty much, Nick, to be honest, I use it on a daily basis. Either when I try to learn something, before I try to be like, hey, what's the difference between this type of memory and this type of memory on Google? And it would take me a lot of tries to finally get the answer. But doing it in OpenAI, I kind of learn a lot faster. So I've just been using it for education purpose a lot. So they have that generative text. OpenAI also has like a image generative solution called DALL-E, where you kind of write down a text prompt and it kind of gives you an image out of it. Midjourney is another one that came out that has been very popular. It's done for same thing as image generative, where you kind of give a text and you get an image. But the two big players, and this is the one that I thought was super interesting. The past 2 days, Bing and Google have, Microsoft and Google have kind of gone at it. Bing recently Microsoft recently announced that they were going to invest in OpenAI, or do another investment in OpenAI, because they had previously invested. Yesterday, which was February 7th, Microsoft did like a secret event. Not many people were able to go. It was kind of open to the public at the last second. But here they kind of showcased how they are integrating OpenAI to Bing. And if you go to bing.com right now using Microsoft Edge, you are able to see some solutions how OpenAI's ChatGPT is being implemented. And it overall helps a lot with the search engine platform. Google is not standing still. They understand that this can kind of make them lose some market share. So Google also recently announced Bard, which is kind of their own version of natural language, OpenAI's ChatGPT. So we can see a lot of big players are doing this. Even Meta, Nick. Meta, even though they haven't released it to the public, they have Make a Video, where you can write a text and it'll give you like a 2 to 3 second animation, or make a scene where it's how I have it to the right here, Nick. You kind of write a text. This person wrote a dog wearing a Superman hero cape and flying on the clouds, and it came out perfectly, right? Imagine it's done in within seconds. So now that we understand generative AI, I want to talk about how expensive this is. For example, OpenAI ChatGPT, there have been some rumors and some tweets that say, hey, this is something that for every 100 words, it costs about a penny. About a penny. And some people will be like, hey, a penny isn't that much. But then if you imagine the hundreds of millions of people using it and the numerous of times they're using it per day, that penny adds up pretty quickly. Meta actually mentioned it in their earnings call. Something I want to mention. Mark, during the earnings call, they asked Mark Zuckerberg a question about generative AI, and Mark answered with the following quote: I think we'll learn a lot about what works and what doesn't. A lot of the stuff is expensive, right? To kind of generate an image or a kind of video or a chat interaction. So end quote there. We can see that even Meta understands that this is a very expensive market to kind of enter at the moment. So they're taking their time. Google, Nick, I don't know if you were able to see when they released Bard, they did mention that they are releasing it with their lightweight model version. This much smaller model requires significantly less computing power, enabling them to scale to more users. So obviously, I mean, I don't think it's to scale to more users. It's going to be for them to save money at a long time, because if they Google is the number one search engine, which I believe with over 90% of total market share in the search engine space. So imagine them giving these out for free. The amount of money, that penny adds up. On a daily basis. So this is very, very expensive, Nick. I do have a few questions that are kind of going to drive this topic a little bit more, but any thoughts here on generative AI? Before we go any further, make sure to hit the thumbs up, as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below.
Yeah, it'll be interesting to see. I think the verdict is still out on whether things like Chat GPT is just a fad that people get over really quickly. But it is interesting, these big tech companies pushing these services out to consumers and integrating it in with services that we use every single day. I think it kind of seals the deal now, right, Jose? I think this is no longer going to be a fad. This is here to stay. I think we're going to start using, maybe for starters, a search engine of some sort. Probably mostly everyone will stick with Google, but maybe Bing as well. We're going to start to expect that generative AI response like you have been using with Chat GPT, Jose.
Yeah, definitely. That was one thing that I was kind of thinking about back then, right? A few weeks ago. Was this just a fad, like you mentioned? Is this only going to last a few months? But I do believe now that Bing and Bing and Google have announced that they are going to do it, I think it kind of seals the deal. I think we are seeing the change of the search engine. Nick, one thing we are seeing, I think generative AI was not what many companies were expecting to release this year. This is, I think, something that happened because of that fad that we mentioned earlier from OpenAI. And because of that, Microsoft, in my opinion, took the opportunity and say, hey, we have less than 5% of the market share in search engine. If we release this right now, who knows? Maybe we can get 6, maybe we can get 7% of the market share. So I believe that kind of fad kind of pushed these companies to jump into OpenAI, into these kind of generative text. I personally believe, Nick, this wasn't part of their game plan. I don't believe this is what they had in mind in November or even in September, that they were going to change things like this. My question is, do you believe that's true, Nick, or do you believe the opposite? Do you believe, for example, these big giants had already implemented into maybe their CapEx forecast that they might need that extra computational hardware? Because I do believe now that Bing is going to have that OpenAI interface, now that Google is going to have that Bard interface, which is going to need that computational power, they're going to need to buy either more GPUs to kind of accelerate or kind of deal with the demand that they're seeing. Do you think this was already kind of implemented into their CapEx forecast, or might this be a bullish case for semiconductor investors?
I think it is a bullish case for semiconductors for sure. But I think it'll be interesting to see how this plays out, though. I would actually point to Meta as a good example. They actually lowered their CapEx forecast. Meta provides a really, really nice 1 year or sometimes even more outlook on their capital expenditures. They had previously said they saw CapEx at 34 to 37 billion last quarter. But then during the fourth quarter report, they lowered it down to 30 to 33 billion. And I think one of the reasons why is they're pausing their data center build out. And Jose, I think you talked about this last week. It looks like they're maybe revamping their architecture of their data centers. That probably almost certainly means they're going to figure out how to cram more GPUs into the data center for this type of application exactly. So it'll be interesting to see how it plays out. I kind of wonder if maybe there's a brief pause this year as these companies kind of pivot towards these new AI services, figure out what kind of equipment they need to do it. And I also kind of wonder if, what kind of disruption is there going to be specifically to like Google's search advertising revenue because of this as
Mhm.
well. It still remains to be seen how they'll implement ads into conversational AI.
Yeah, Nick. I want to say that was probably one. I just did a video on my main channel about this, and that was probably one of my biggest concerns because one of the great things about generative AI is, hey, you once you ask a question, you're most likely going to get your answer off the first response. So opposed to now, if you go to Google, if you go to Microsoft Bing, you're going to search something, you're going to click through multiple tabs first before actually finding your answer. And as you click through multiple websites, you're going to get hit with multiple ads. Obviously the impressions of ads you're going to get hit for increases. Now if they kind of give you a more definite answer where you don't have to click around, the amount of ad impressions you're going to see is going to decrease dramatically. And I
Mhm.
have this is something I'm wondering how companies like Google are going to kind of think about moving this forward, right? Because I mean, I one way you need to evolve with technology, right? Because you can't keep the same Google if Microsoft Bing is going to be doing something much better. So you have to evolve in technology, but at the same time, I guess you have to do it in a way where it doesn't overall hurt your business too much. So I think it's going to be a very interesting year for sure, Nick.
For sure. There's also some potential, some possible legal ramifications of this too. It could be actually an absolute minefield as well, because we've seen this with some of the art, generative AI art, where artists are saying, "Hey, your AI, your AI was trained using my work," um, and something could happen with AI based search results too. So let's say you use Bing or Google using Bard, and it comes up with an answer based on something that a publisher wrote on the internet. How does that publisher now get compensated if, say, Google search just synthesizes its own answer based off of that search result? There are so many implications to this, and we just don't know what those are going to be yet.
Yeah, definitely, Nick. It's going to be a very, I want to say it's going to be a very interesting year for generative AI. We already see how Microsoft is already planning on implementing it into some of their other platforms. And both these companies, both Alphabet and Google, mentioned that they're going to start releasing it slowly within the next few weeks to the massive amount of people. I'm super curious on how this is going to change the demand for things like graphics cards, Nick.
Absolutely, I think that's, well, I mean, that's probably why Nvidia has rocketed higher in recent months. One of the reasons, anyways.
Definitely, Nick. So I think this is it for topic number two. I think this is actually going to be a great segue for topic number three. I want to take a closer look at this NVIDIA versus Intel Corporation, the CPU kind of to the GPU market. So if we kind of start off here with the first slide, Nick, this is a slide you did. And we did an episode earlier this week on the chip investing channel. The link is down below, where we take a little closer look at the downfall of Intel. There was an important slide you grabbed here that I wanted to kind of do a segment on, and it's this Intel versus NVIDIA. And before this is kind of their data center revenue segment. First thing we're saying, right, in 2020, 2021, Intel had a huge lead in the data center market. And before we go any further, I know some of you guys are going to be like, hey, Jose, the data center market is a little bit different from Intel and NVIDIA. One hits the CPU, one hits the GPU. Don't worry, we're going to get into that. But overall, I just want to say it's insane, right, Nick? That difference between 2020 and 2021, how Intel dominated in forms of revenue. And now in 2022, where you have this kind of quarterly breakdown for us, you can see how it's almost a one-to-one basis now. Any thoughts there, Nick?
Yeah, like you said, it's not apples to apples comparison, but it's important to still think about them as a comparable business. And like you said, we're going to get into that. So stick with us. We're not committing. We're not committing a faux pas here. Like this is there's a point.
So one thing, Nick, is there have been a huge change in workloads in the past 10 years. And this change of workloads, it has kind of changed the demand of certain hardware. One of that biggest workload are AI computational. And the thing is, AI computing is pretty much math intensive. It's a lot of processing, a lot of calculating, a lot of algorithms. And typically you need to use some form of accelerated system for this. Accelerated computing is the use of some crazy hardware or some specialized hardware. Right now, that is the GPU, right? And that's why as AI computing and AI workload continues to increase, we are continuing to see the increase of demand for the GPU market. And this AI computing is usually a workload that can kind of slow down or bottle down a CPU because a GPU kind of works in parallel while our CPU kind of works in a serial manner. And for this AI computation, you want to do as much as possible. So parallel processing is the way to go. I do want to mention, Nick, there right now the most known accelerated system is the GPU, which we know Nvidia for. But one that is widely increasing in demand is the DPU, which is kind of changing the kind of networking side. So it's accelerating the networking side. And I do believe this is very important to know because it's something we're seeing a lot of big techs do. Nvidia has their Bluefield DPU. AMD recently purchased Pensando, I want to say maybe 2-3 quarters ago,
Hmm.
where they kind of got the Pensando DPU, and we can see the accelerated market is very, very important. Um, Before I kind of get your thoughts here, Nick, I just want to show the next slide. And this is kind of explaining accelerated computing. First, in the blue, we have kind of CPU performance. We see in the 1980s when CPUs came out, the CPU performance was growing at a rapid pace. Kind of fast forward to the 2010s, that kind of started to slow down. And we see the growth of the GPU performance. Since GPU has kind of started in the early 2000s, it continues to grow that performance at a dramatic pace, especially for certain workloads like artificial intelligence. And like we saw, Nick, I mean, I think the previous slide, the previous topic, we talked about generative AI, a prime example of AI computing. They're not going to go, cloud providers are not going to go out there and buy more CPUs because they're seeing a growth in generative AI. They're going to go buy things like more GPUs, like you mentioned, how Meta might be shifting their data center to a more efficient infrastructure. And in that efficient infrastructure, who knows, they might even continue to purchase even more GPUs. So, Nick, before I get into any other slides, I just want to hear your thoughts here, if you have any.
Before we go any further, make sure to hit the thumbs up as it does help us grow our overall audience. Also, don't forget to hit the subscribe button and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below.
Yeah. So, Jose, I think for a couple weeks now, I keep alluding to a quote from NVIDIA CEO Jensen Huang, and I found it. It was back in 2020 during one of their earnings calls, where it actually jives with this chart, the last chart that you just showed, where the computational requirements of transformer AI models kind of crosses all AI models, excluding transformers. It was about 2019, 2020 when that happened. And Jensen Huang actually said most AI up to that point used CPUs. But at that time, it was quickly changing where CPUs were no longer going to cut it. And I mean, the man is a luminary. This was 3 years ago now. He said it's changing. New AI that's going to start coming out is going to need GPUs. And so everything you're talking about here, we're talking about 3 years later. NVIDIA actually like warned everybody 3 years ago.
Mm-hmm. Definitely, Nick. And kind of just looking at that, I mean, it's just, I think it's just crazy how new this market is. I mean, I think just the data center market as a whole started in the early 20 teens, if that, maybe in the late 2000s, but it's still a very, very new market. now kind of going into artificial intelligence training that didn't start into the into like the mid 20 teens. We have this kind of slide here that you were just mentioning, Nick, where we see kind of that AI workload starting around maybe 2014, 2013. And now this huge kind of change in transformers, and these transformers are what's kind of helping all these kind of language models that we're seeing for chat GPT, which is more of like a natural language. But you have all these other transformers that are things for biomed, for cybersecurity, for everything else, right? And that is just starting off, and you can see the overall growth here. So I think it's insane how early we are into this kind of, in my opinion, the accelerated computing market. And we do see that Nvidia is playing a big role here. Um, so Nick, I had one final slide here. When we think about Intel, I don't think we ever compare it to Nvidia. I think it's like, hey, Intel's here and we should worry only about AMD. But do you think Intel should be worried about Nvidia as well? I mean, Nvidia has, right, they have their GPU, their accelerated market, which we're seeing the AI computing is kind of taking over, is taking over numerous workloads, especially in the AR market, which is evolving at a fast rate. They have a DPU, which is another accelerated computing for the networking side. And soon, in the upcoming quarters, they're going to release their first CPU market. So, do you think the story has changed? Is now should Intel be worried of both AMD and Nvidia at the same time?
Absolutely. And I think that's always been the story, Jose. You and I have been talking about this for a couple of years now, but again, Nvidia kind of gave all of us investors, a warning message many years ago. And the reason is the legacy market that Intel is kind of king of the mountain of is slowly being eroded out from under it. As companies, see, Pat Gelsinger said on Intel's last earnings call, they said our installed base is like 95% of the existing cloud market. That sounds great, but the problem is that cloud market is shifting. Where if you're a cloud provider, maybe before you would have said, hey, we've got all these Intel CPUs, let's go back to Intel to replace them. Except that this time, because of generative AI and some of this next gen software services that are getting implemented, you can't just replace the existing CPU with something better. You now have to rework your architecture that incorporates more of this next gen type of chip. So, absolutely, I think it is worrisome for Intel because it's not just, hey, we have this market that's not going away that we'll continue to sit on. The market is disappearing, and NVIDIA is helping propel that shift away from the legacy CPU to itself.
Definitely, Nick. Thank you so much. And I think that should be it for topic number 3. And I think this is actually going to be a great segue to topic number 4, where we're kind of talking a little bit about how the market is changing. So for topic number 4, Nick, we're going to take a closer look at the semiconductor revenue for 2022 and how it kind of shifted compared to 2021. We're going to get some nice breakdowns. So let's start with slide number 1. I do want to say this information is free for anybody that wants to look at it. It's at the Semiconductor Industry Association, and they get the source from WSTS. There's a lot of great information there for free. So let's just kind of get a breakdown of it. First, they did mention, Nick, that for the overall 2022, sales were $573.5 billion, up 3.2% year over year. Unfortunately, I forget to grab the 2021 numbers, but 2021 was an amazing double-digit growth for the semiconductor market. The first half of 2022, Nick, was a record half for the semiconductor industry. Unfortunately, the second half of this year was where things were slowed down dramatically. A prime example, quarter 4 of 2022 was 130 billion. That was down 14.7% on a year-over-year basis and down 7.7% on a quarter-over-quarter basis. In this article, they did mention that something we've discussed a lot, Nick, that even though things are looking bad in the short term of things, there's a huge amount of tailwind for the semiconductor industry due to the overall kind of smarter world that's happening right now. We have just better phones, AI generative solutions in general. We were just talking about better computers, the kind of automotive market. So the world is getting smarter, and the demand for chip is here to stay, at least for the next. I want to say at least for the next decade. I mean, I believe chips are going to here to stay for the future, because eventually technology is going to continue and continue to innovate. So Nick, before I kind of get into the next slide, which I have a charts to break down where the revenue is coming from, any thoughts here?
Yeah, this is a great chart. It is worrisome to see those big dips, and especially the red line dip into negative there, signifying some year over year declines. But if you look back over the last few decades that are listed here, you can see this is actually par for the course. This is maybe a little bit worse than average, what's shaping up right now, but the long-term growth trend very much still intact. And we will almost certainly see that blue line cross the $1 trillion mark by the end of the 2020s. That seems to be the broad-based expectation now, both within the chip industry and externally from analysts as well.
Definitely, Nick. I had a few questions here with the chart. What as a semiconductor investors, what are your expectations for, I want to say, the blue line in maybe the upcoming quarters? Do you expect a little bit more dip? Do you expect more of a flat line, maybe a reverse? How are you seeing? How do you expect that kind of blue line to shift within the next few quarters at least?
Mm-hmm. Yeah, with most of the major semiconductor companies having reported already, their outlook for the first quarter of calendar year 2023 is not great. We may see things turn a bit more negative, but it does sound like it'll be negative maybe at its worst in Q1, be negative again in Q2, but maybe not as bad. And then by Q3, Q4 of 2023, we're back in growth mode again. That seems to be the general consensus among the semiconductor companies that have reported thus far.
Before we go any further, make sure to hit the thumbs up, as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below.
Yeah, definitely, Nick. And again, if you guys enjoying the channel, make sure to hit the subscribe. And if things change, we'll obviously do an episode where we might say, hey, we talked about this in quarter one, but things now in quarter two or quarter three are shifting. So we're kind of shift our outlook as well. So thank you for that, Nick. Next, I kind of want to just jump into the overall chart, which again, all the source can be found in the Semiconductor org. I kind of posted the link down here. But I want to start off with the bottom chart, Nick. It kind of breaks down the revenues per devices or chip style. So first, they did mention that the analog market, which is our chips used in pretty much a lot of vehicles and industrial space, was 89 billion this year in 2022, and it grew 7.5%. So nice growth there. Logic, I was honestly shocked that logic grew 13%, Nick. It's 176 billion. It's the biggest portion. And logic is used in everything from the chips that go on your laptop, that go on your cell phones. And we know these past 2 quarters have been horrendous for, I want to say, consumer electronics with the over inventory. So I was shocked that it was up 13%. But it kind of makes sense if the first half was a record year for them. The one that also shocked me, but it shouldn't have shocked me too much, is the memory market was down 15%. And one thing, Nick, I believe you have mentioned a lot in this channel is the memory market is the first to go. And it seems like that was true again for this year. So memory was down 15%, the second largest market at 130 billion. But it does seem like, hey, the memory is the first to go. So does that mean, Nick, that memory is usually the first to come back up? Do you think?
Not necessarily. Downturns in memory chips are brutal because it's such a commoditized part of the market. I mean, memory densities continue to increase, and so they continue to improve, but memory is just used as part of so many bigger computing units. It's just highly commoditized, and the downturns can be absolutely brutal. It may not be the first one to recover this year. In fact, if you believe Micron's outlook, the downturn for them might creep into the second half of calendar year 2023. We'll have to see how it plays out.
Definitely, Nick. And then the last one, the automotive IC, and these are kind of these big high logic chips that go into the cars. This one grew 29.2% this year, and this is something that we're seeing a lot. We saw that AMD, their embedded market grew, and they mentioned thanks to the growth in automotive. Intel's mobile eye market grew thanks to the demand of their IQ chips, which are their ICs for automotive. I'm gonna grab my crystal ball here and say that Nvidia, when they report their automotive market, we're gonna see a strong growth in that as well. I believe Qualcomm also kind of showed growth in the automotive market. And what I think is super insane, Nick, is this was a market that last year in 2021 grew 34%. So it seems like the automotive, even though it's a very, very small, right? It's the smallest out of here, is the one that's growing at impressive levels. And I personally don't think this is going to stop anytime soon.
No, I don't see how it could. You mentioned this last week, I think, Jose, some of the multiple tailwinds pushing this segment forward. Obviously, you mentioned Mobileye and Nvidia. They benefit from vehicle autonomy, even if it's just like maybe say adaptive cruise control. Pretty simple system. When you kind of like get in the car and use it, it doesn't seem that impressive. A lot of chips driving that forward, eventually full self-driving. But the other thing too is vehicle electrification. So on top of the vehicle autonomy, when you rip out an internal combustion engine and replace it with a battery, you're talking about now your entire drivetrain of your car that has to be basically one big giant electrical component. You have a battery, you have two electric motors, maybe one, maybe two of them, and then a bunch of electronic circuitry throughout, analog and IC chips. Yeah, I agree with you, Jose. I do not see this slowing down. I actually could imagine a future not so far down the road, no pun intended, where these automotive chips are maybe kind of close to some of these other segments, maybe like close to the analog segments and the memory segment, because the auto industry is so huge.
Definitely, Nick. I mean, like you mentioned with the autonomy, just the adaptive cruise control. Another thing that I'm seeing a lot more is vehicles just having like that parallel parking assist help. And that alone is a form of autonomy that's going to use some form of chips within it. So small things like that. Sometimes when we think of autonomous, we think of that self-driving, but there's so many sensors to just simple things like that. So very interesting. Next, Nick, I want to kind of just break down the revenues and kind of talk about the biggest driving segments or the biggest players. So for December of 2022, China was still number one, Nick, with $12.6 billion spending. And even though, Nick, every other market kind of grew versus 2021, just because China alone was down on a quarter basis, the overall revenue growth was only 2.2% this quarter. So it's pretty interesting how this is still, it's down 6.6% from 2022 versus 2021. In December versus November, it's down 5.7%. This is the real crazy one, Nick. In December of 2022, it's down 26% versus December of 2021. And even with that drop, Nick, it's still the number one market in the semiconductor space. I have a question here, Nick. Are investors, do you think investors have planned a scenario where if China does come back, that alone could be a huge driving force for the overall semiconductor space?
I think in part, maybe that's what the market is looking at, but it's multiple things. First, China loosened up its COVID regulations and they had this huge surge in COVID-19 infections. And suddenly their economy has been hit really hard from that. But then also the chip export bans. So the COVID-19 issue may be a bit more transitory. The chip bans to China, that's maybe a little unclear still how that's going to play out. So it's hard to say if there's a full recovery later this year or in 2024. It is such a huge market. I don't know, Jose. I think the market is maybe partially pricing in a recovery, but maybe not a full recovery just yet.
Definitely, Nick. And just for our listeners in the podcast, let me read some of the numbers. Like I mentioned, China is the biggest in December of 2022 with 12.6 billion. Second comes in Americas with 11.3 billion, and that was up 16% versus the full year of 2022 versus 2021. I do believe we did see a huge growth in the cloud server providers, and that's probably what's boosting the America market. The third in line is Asia Pacific and all others with 11.04 billion. So those three alone probably make up about 80% of the market. Next in line is Europe with 4.4 billion. And third, and the last in place with how they do the breakdown is Japan with 3.96 billion. Again, nothing. I want to say the one that just dropped, the 2 points that drove the most kind of eyes for me, Nick, was just China down 26% in December of 2022 versus December of 2021. The second one was just the overall growth that America saw this year of 16% growth for the full year of 2022 versus the full year of 2021. Maybe this is why we're seeing a lot of maybe big tech slow down their capex this year, where last year they probably spent a lot of money on kind of investing in chips and just obviously the overall consumer market as well. So Nick, before I end this topic and we'll take a closer look at topic number 4, any final thoughts on your end?
Yeah, it'll be interesting to see how this plays out in the next year with China. It's messy right at the moment, but we'll see. There's a lot of upside if and when these issues get sorted out.
Definitely, Nick. And now for topic number 5, you're going to take the lead here. And this one's going to be an interesting one, right? Invest in Elon Musk, SpaceX / Starlink. How can we do that, Nick?
Okay, so this is our like topic to lure new listeners in, right? Ooh, invest with Elon Musk and SpaceX and Starlink, which is a subsidiary of SpaceX. That's the satellite communications business that's providing broadband internet to the globe. Fast growing segment there, but it's private. It's a private company. It's not part of Tesla. It's a completely separate, privately held business. So the vast majority of investors, this is off limits to. So we have a roundabout way that we might be able to get a slice of this growing market, though, Jose. A couple of fun facts, though. I wanted to run these by you because a few of them surprised me. So I saw this study from this, I think it's Lichtman Research Group. Recent report said 90% of U.S. households get internet at home. Only 90%. That's the part of that shocked me. I think at this point, like someone's just not using computers at all, right? That's gotta be what that is. Okay, so
I can't imagine, Nick. I sometimes I joke around with like my wife or my friends, like, how if you had a Google, if you had some random thought, you couldn't Google it back then. You had to open up like a big encyclopedia book and try to find your answer. And I think that's insane. I can't imagine a world without internet right now.
Yeah, there's a lot of people not making use of it. So this is also interesting. So of the people that do get internet at home or that use the internet, there's an estimated some number in the tens of millions in the US that have no broadband access. So no high-speed internet. And that of course doesn't include, countless hundreds of millions more around the world that don't have access to high-speed internet. And so because of this, there's a lot of growing interest in the satellite communications or SATCOM industry. Some estimates pointing to it being worth tens of billions of dollars per year in revenue. Maybe some estimates even over 100 billion, perhaps, by 2030, and that's an annual revenue. So, just given some of these couple of bullet points, does the SATCOM industry interest you as an investment, Jose?
I want to say yes, Nick. Not just because of this, but I mean, as we're kind of evolving to more of the data center on edge, or the cloud on edge is what they're calling. I think the demand for satellite is going to increase dramatically, or for this kind of satellite communication. So obviously this alone is there, but I do believe with the emerging markets that we're seeing and how we need to be able to have that data wherever we need it at a rapid pace, I think that's going to continue to increase demand of something like this. So again, not something I would just kind of blindly invest into, but something that would be like, hey, this is on your top of the list to do more research on, because there's definitely a growth opportunity here.
Absolutely. And we have seen some companies that, some of them are meme stocks. There were some SPACs that hit the market in 2020 and 2021 that kind of marketed themselves as like a space industry pure play. But I want to focus just on a handful because, per usual, Jose, I really think so many investors could benefit by, instead of focusing on like the latest hot technology trend, just look at the chip stocks that are making that hot tech trend possible in the first place. So I threw together a very, very quick list here of stocks that are participating in this new space industry. I threw Apple on here because they announced in December 2022 you could use, I think, just the iPhone 14 you could use for like emergency calls and text messages using satellite communications. Then Qualcomm had an answer to that here just recently. They partnered with a company called Iridium Communications, ticker symbol IRDM. They actually have a broadband internet, low Earth orbit satellite constellation already up there working. It covers 100% of the globe. I actually invested in Iridium, I think back in 2016, 2017. I got it at like $8 a share and made out at over $40 a share last year's when I cashed out, which was great until, now it's at like $60 a share. So I sold too soon. But Qualcomm and Iridium partnered up to make the Qualcomm Snapdragon satellite platform, kind of an answer to Apple. But then one more slide here to highlight AMD and specifically Xilinx. Broadcom, I think, has some satellite and space chips as well. But when AMD acquired Xilinx, the FPGA company, Field Programmable Gate Array company, they got a space business with that. Obviously, the benefit with an FPGA, it's reprogrammable. Kind of hard to get a human up there to service a satellite, right? So if you can reprogram a chip remotely, like with an FPGA, there could be a lot of benefit to that. So possibly AMD, via its acquisition of Xilinx, a potential stock that could benefit from this emerging space industry. So what do you think of this, Jose? Is there a better bet that you know of on the space industry other than chip stocks?
Before we go any further, make sure to hit the thumbs up as it does help us grow our overall audience. Also, don't forget to hit the subscribe button, and let's take a quick listen to today's sponsor.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Also, if you want to learn more about Nick, make sure to check out his YouTube channel. The link is down below.
For my limited knowledge, I would say no, Nick. But I want to say, I think for any emerging technology, the best play is always a semiconductor market, because the semiconductor, there's going to be a chip within that. And I think it's if this kind of space market or SAT communication market continues to grow, it's going to be how we're seeing it with these chip stocks in the automotive market, where it's going to be, hey, 1% of companies' total revenue, but throughout the years is going to be a whole different amount. We're seeing, like we saw the automotive IC in the previous slide, continue to grow, or the previous topic, grow at over 20% this year and over 30% last year. And I believe that's, if this is a market that's going to continue to grow, my best way to go about it would be like this, Nick. Look for a semiconductor company that might not be a sole play in here, but can definitely benefit in the future as the market continues to grow. Because at the same time, you get a good play like AMD, where their FPGAs are used in numerous things like aerospace defense, other forms of acceleration for data centers, for automotive, but they're also used in the SpaceCom market. And if that SpaceCom market grows, then obviously we can see great benefits for companies like AMD, and same for Qualcomm, right? Very interesting. Another interesting play, which is also getting their chips in all different markets away from just the mobile space.
Yeah, I absolutely agree with you, Jose. It hurts me to see this when there's like a hot trend. You mentioned the automotive, like the EV industry in particular, all of these upstart electric vehicle manufacturers, and investors pile into them. And you either to get like the big game changing growth investors are after, you either have to get lucky and pick the right one, or you have to invest in a big basket of them and hope that just one or two of them out of that big basket grows so much that it kind of compensates for the vast majority of them that fall flat on their face, or disappear entirely. So I like chip stocks for this reason, because these companies, by and large, they're already well established, but they're still growing, like you said, and they're also, by and large, already profitable. Many chip companies are very shareholder friendly. So you get the growth, they're profitable, and so you oftentimes, if you don't get a dividend, you get share buybacks. So I think I agree with you here. I like chip stocks, and if this kind of space economy continues to build momentum and investors get super excited about picking the next SpaceX, the next Starlink, I think chip stocks are where the vast majority of investors should begin their journey.
Yeah, and I think that's a great point, Nick. This is where they begin the journey, right? Because this is where I feel you can learn a lot of the different solutions, and then from there you can kind of expand your knowledge and be like, oh, maybe this is definitely one of the growth companies I can kind of take a closer look at, maybe open up a very, very small position, but I understand this market a little bit more because I understand some of the technological side of it, that I feel a little bit more confident investing in maybe something like this. So that's when I think I've learned so much, Nick, about various industries because I'm in the semiconductor market. The data center, for example, is a whole different side of it. But learning about liquid cooling, for example, was thanks to, hey, how is this chip being used? What are some of the issues? Now let me start looking at something outside of the semiconductor market that is kind of helping solve this issue. So I do believe for a lot of technology, semiconductor is a great stepping stone to kind of start off and just start reading.
Yeah, absolutely.
All right, Nick, appreciate that. I think today was a pretty fun episode. I really enjoyed, I mean, learning about that ARM IPO. After every episode, Nick, my brain is always flowing with juices. So thank you. I want to thank all the listeners for watching. Make sure to leave us the comments to let us know what you guys want us to discuss. So thank you. And make sure to check out Nick's channel. All the links are down below. And I'm pretty sure you got hit with numerous ads kind of explaining where he's at. But just one more. Make sure to find them. The link is down below. Nick, thank you again. Viewers, see you again next time for episode 15.